Hey everyone, welcome back to Corporate Decoder, the place where we unravel the secrets hidden in corporate filings with a smirk and a surprisingly simple explanation. Today we are diving into BlackRock Fund's latest financial report, a document packed with numbers that tell a story about how these investment giants are managing your money. So what exactly are we looking at here? It is a semi-annual shareholder report detailing the iShares Developed Real Estate Index Fund and the iShares FTSE Nareit, all equity REIT index fund for the period ending the 31st of July 2025. Think of it as a deep dive into the holdings and performance of some major real estate investment funds. If you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below. Join us there. Alright, let's get straight to the numbers, starting with the iShares Developed Real Estate Index Fund. As of the 31st of July 2025, this fund managed a cool $236,701,211. That is a lot of real estate. Now, this report is for the first half of their fiscal year, which ended on the 31st of July. You're probably wondering what it costs to have your money managed in this fund. For a hypothetical $10,000 investment in their institutional shares, you would have paid just $14 for the 6-month period. That is incredibly low even for their investor shares. It was only $25. This is a small price to pay for professional management of such a large fund. Now let's talk about where the money is invested. Unsurprisingly, the United States is the top dog with 62.7% of the net assets allocated there. Japan comes in second at 8.8%, followed by Australia at 6.5%. This shows a strong focus on developed markets with a significant portion dedicated to real estate in the US. When we look at the top holdings for the iShares Developed Real Estate Index Fund, it is dominated by big names in the real estate world. Welltower Incorporated holds the top spot at 6.0% of net assets. Prologis Incorporated is close behind at 5.5%, then Equinix Incorporated at 4.2%, and Digital Realty Trust Incorporated at 3.3%. These are established companies in the real estate sector. The iShares Developed Real Estate Index Fund is structured in a way that different share classes have slightly different cost structures. For example, the institutional shares have a very low expense ratio of 0.28% annually. The investor shares are a bit higher at 0.49% annually, and the Class K shares are the most cost efficient at 0.24% annually. This tiered pricing structure is common for mutual funds, allowing different types of investors to access the fund with costs that align with their investment size and needs. Now, shifting gears to the iShares FTSE Nareit All Equity REIT Index Fund. This fund is significantly larger with net assets totaling a massive $1,865,444,508 as of the 31st of July 2025. This fund focuses specifically on real estate investment trusts or REITs that invest in equity. Here is something really interesting about this fund. The cost for a hypothetical $10,000 investment in the iShares FTI Nareit All Equity REIT Index Fund for the last 6 months was $0 and 0%. That means this fund is essentially free to manage for shareholders, which is quite remarkable and highly attractive to investors. Looking at the industry allocation for this fund, specialized REITs make up the largest portion at 37.6%. This is followed by healthcare REITs at 15.0% and retail REITs at 14.1%. This diversification across different real estate sectors helps spread risk. The top holdings here also feature familiar names, but with slightly different weightings and a broader range of real estate sectors. Welltower Incorporated leads again at 7.9%. Prologis Incorporated is at 7.3%, American Tower Corporation at 7.1%, Equinix Incorporated at 5.6%, and Digital Realty Trust Incorporated at 4.4%. Notice the significant presence of cell tower and data center related REITs, reflecting the specialized nature of this index. Let's take a peek at the actual investments in the schedule of investments for the iShares Developed Real Estate Index Fund. Here we see many specific company names and the number of shares held. For example, Alexander and Baldwin Incorporated with 97,830 shares, valued at $1,758,983. Following this are other diverse real estate companies showing the breadth of the fund. S Holdings. Another example from the iShares FTI Nareit All Equity REIT Index Fund. S schedule of investments shows Digital Realty Trust Incorporated holding 461,260. Shares valued at a substantial $81,384,714. This level of detail highlights the specific real estate assets the funds have invested in. Now let's look at the statement of assets and liabilities for the iShares Developed Real Estate Index Fund. It confirms the total net assets at $236,701,211. Liabilities are relatively small at $1,209,507. This indicates a healthy financial position with assets significantly outweighing liabilities, providing stability to the fund. In the statement of operations for the iShares Developed Real Estate Index Fund for the 6 months ended the 31st of July 2025, we see a net investment income of $4,934,721. This is the profit generated from the fund S investments after all expenses are paid. It is a positive number indicating the fund is doing a good job generating returns. On the same statement, we see the realized and unrealized gains. For this period, it is a net gain of $2,418,101. While there was a slight unrealized appreciation on investments, the realized gains from selling some holdings and the overall performance kept the fund in the positive territory. For the iShares FTSE Nareit All Equity REIT Index Fund, the picture for the 6 months ended the 31st of July 2025 is a bit different. Their net investment income is a much larger $35,565,267. This reflects the fund's larger asset base and its success in generating income from its real estate investments. However, this larger fund experienced a net realized and unrealized loss of $41,228,952. This is mainly due to a significant change in unrealized appreciation on investments, which was a negative $34,853,998. Market fluctuations can definitely impact these types of funds. Looking at the financial highlights for the iShares Developed Real Estate Index Fund, the institutional shares ended the period with a net asset value of $8.19. This represents a solid total return of 3.46% for this 6-month period. It is important to note that this return is not annualized, meaning it is the actual return for that specific half year. For the investor, a shares the net asset value ended at $8.17 with a total return of 3.38% for the same period. The very slight difference in NAV and total return between share classes is due to their differing cost structures and any specific fees associated with each class. Class K shares also finished at $8.17 per S-share with a total return of 3.49% for the 6-month period. This demonstrates consistent performance across the different share classes, adjusted of course for their expense ratios. For the iShares FTSE Nareit All Equity REIT Index Fund, the net asset value ended at $9.31. For this 6-month period, the total return was actually negative 0.36%. This is a good reminder that even with professional management and seemingly low risk assets like real estate, the market can and does move in unpredictable ways. Now let's touch upon the risks. The report details something called valuation risk. This means that the market value of assets can fall simply due to general market conditions, not necessarily any specific company problems. They also highlight counterparty credit risk, the chance that a party in a financial transaction might not be able to fulfill their end of the deal. These are important considerations for any investor, especially when dealing with complex financial instruments. It is also worth noting how these funds are legally set up. They are part of BlackRock funds, a trust registered under the Investment Company Act of 1940. This is a standard structure for large investment companies designed to offer a layer of regulatory protection and oversight for investors. The report also includes a section on the Investment Advisory Agreement. This is essentially the contract between the fund managers, BlackRock Advisors, LLC, and BlackRock Fund Advisors, and the fund itself. They go into detail about the annual contract review process by the Board of Trustees, ensuring that the fees and services provided are fair and reasonable for the shareholders. This annual review is a critical part of fund governance, ensuring accountability. Looking back at the iShares Developed Real Estate Index Fund, the net assets for the institutional shares were $33,198. This is a smaller segment of the overall fund, but demonstrates the different share classes operate with their own financial data. For the iShares FTSE Nareit All Equity REIT Index Fund, the net assets at period end were a very large $1,865,445,000. This massive scale is what allows for such low management fees, essentially spreading the cost across a huge asset base. Now for the corporate decoder take, BlackRock's real estate funds appear to be operating smoothly. The iShares Developed Real Estate Index Fund showed positive investment income and realized gains over this period with very low costs for investors. The iShares FTSE Nareit All Equity REIT Index Fund, while larger, showed a net loss for the period, primarily due to market fluctuations in unrealized gains, but its zero cost structure for management is an undeniable competitive advantage. Both funds are investing in substantial, well-known real estate companies, indicating a strategy focused on established players, though the FTSE Nerit Fund shows a greater appetite for more specialized REITs like cell towers and data centers. The biggest risk highlighted is valuation risk and counterparty credit risk, which are inherent in any investment fund, especially those dealing with derivatives or complex financial instruments. The extensive discussion around the advisory agreement also signals a commitment to transparency and good governance, with the Board of Trustees regularly scrutinizing the relationship with BlackRock. Overall, BlackRock seems to be managing these real estate funds competently for their shareholders. The key takeaway is the immense scale that allows for incredibly low fees, in some cases zero fees for investors, which is a huge win for anyone looking for long-term real estate exposure through these funds. Alright, that is our breakdown of BlackRock Fund's latest filing. What is your take on these numbers and what they signal for the company? Future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.